Rich people rarely depend on one paycheck or one business for all their income. They often put money into businesses and assets that can produce recurring cash flow, increase in value, or operate with professional management. In this video, we are sharing 10 business ideas that rich people use to make money every month. Number 1. Buy boring businesses with steady cash flow. Wealthy investors often prefer businesses that solve ordinary problems every day. Think cleaning companies, HVAC services, plumbing businesses, bookkeeping firms, pest control companies, or commercial maintenance services. These businesses may not look exciting, but customers need them repeatedly, which can create predictable revenue and dependable monthly cash flow. For example, an investor might buy a local commercial cleaning company with hundreds of recurring contracts. Instead of building everything from zero, they acquire existing customers, employees, equipment, and operating systems. They can then improve pricing, reduce unnecessary expenses, add customers, and potentially increase both monthly profit and the company's value. Number 2. Commercial real estate and rental properties. Commercial real estate can generate income by renting space to businesses rather than relying only on property appreciation. Investors may own office buildings, retail locations, medical offices, apartment properties, or small commercial centers. The goal is usually to acquire property where rental income can comfortably support operating expenses and financing costs. Imagine buying a small building containing 6 business units. Instead of depending on one tenant, rent comes from several businesses each month. If rents increase over time while the mortgage balance declines, the investor can potentially benefit from cash flow, growing equity, and appreciation, although vacancies and maintenance still create financial risk. Number 3. Holding companies that own multiple businesses. A holding company can own interests in several separate businesses instead of generating revenue from one operation. Wealthy entrepreneurs sometimes use this structure to organize multiple companies, investments, or assets under broader ownership. Each operating business can have its own customers, employees, finances, liabilities, and management, while ownership remains connected. For example, one holding company might own a landscaping company, cleaning business, equipment rental operation, and logistics company. If one business experiences a difficult year, the entire portfolio does not necessarily stop producing income. This approach also allows owners to reinvest profits from successful operations into acquisitions or expansion opportunities. Number 4. Private lending to businesses and investors. Some wealthy investors make money by becoming lenders instead of borrowers. They provide capital to qualified businesses or real estate investors and receive interest in return. Private loans may be structured around specific projects, properties, equipment, or business needs, with repayment terms established before the money is provided. Suppose an experienced property investor needs short-term financing to renovate a building. A private lender might provide the required capital under a legally documented agreement and earn interest and fees. The potential return can be attractive, but borrower quality, collateral, loan structure, documentation, and default risk must be carefully evaluated before lending money. Number 5. Buy, improve, and resell small businesses. Buying and improving businesses works somewhat like renovating property. Instead of purchasing a struggling company and simply hoping it improves, experienced buyers look for specific problems they know how to fix. These could include weak marketing, poor pricing, unnecessary expenses, outdated technology, inefficient operations, or an owner doing too much personally. Imagine acquiring a profitable service company where scheduling, billing, and customer follow-up are still handled manually. The buyer introduces better software, improves marketing, hires management, and increases recurring revenue. If profits grow substantially, another buyer may eventually be willing to purchase the improved company at a significantly higher valuation. Number 6. Equipment and asset rental businesses. Instead of selling an expensive asset once, rental businesses can earn money from the same asset repeatedly. Common examples include construction equipment, trailers, generators, tools, event equipment, storage containers, and specialized machinery. The economics become attractive when rental demand remains strong and the asset generates enough revenue relative to its purchase and maintenance costs. For example, a company buys several pieces of construction equipment and rents them to contractors by the day, week, or month. Each machine can generate multiple payments throughout its useful life. Successful operators carefully track utilization, maintenance, insurance, financing, transportation, depreciation, and resale value because owning unused equipment can quickly become expensive. Number 7. Franchise portfolio ownership. Some wealthy entrepreneurs do not build every business concept themselves. Instead, they purchase franchise locations with an established brand, operating system, supplier network, training process, and business model. Once they understand how one location operates successfully, they may expand by opening or acquiring additional locations within the same franchise system. Imagine an owner successfully operating one service franchise. Instead of personally working there every day, they build a management team and eventually acquire several additional territories. Multiple locations can create larger revenue and operational efficiencies, but franchise fees, royalties, payroll, lease costs, local competition, and location performance still determine whether the portfolio actually makes money. Number 8. Warehouses, storage, and industrial property businesses. Industrial properties can be less glamorous than luxury apartments or office towers, but they serve essential business needs. Companies require warehouses, distribution facilities, workshops, manufacturing space, and storage. Investors can purchase these properties and generate rental income from businesses that need physical space to store products, equipment, vehicles, or inventory. Self-storage follows a similar principle on a smaller scale. Instead of renting an entire building to one tenant, an operator rents individual units to many customers. When occupancy remains high and operating expenses stay controlled, the property can produce recurring revenue. Location, acquisition price, financing, competition, security, and occupancy remain critical factors. Number 9. Acquire businesses with seller financing. Wealthy buyers do not always pay the entire purchase price for a business in cash. Sometimes the seller agrees to receive part of the price over time. This is called seller financing. It can reduce the amount of cash the buyer needs up front while giving the seller scheduled payments after ownership transfers. For example, imagine a business is valued at $1 million. Instead of paying the full amount immediately, a buyer might combine personal capital, outside financing, and a seller financed portion. The acquired company's future cash flow can help support repayment, but buyers must avoid taking on more debt than the business can realistically handle. Number 10. Build businesses that run without the owner. One major difference between owning a business and owning a demanding job is whether the company can function without the owner handling every decision. Wealthy entrepreneurs often focus on building systems, management teams, documented processes, financial controls, and clear employee responsibilities that reduce the company's dependence on one individual. Consider two companies producing similar profits. The first requires its owner to work 60 hours every week. The second has trained managers, documented procedures, automated reporting, and employees who handle daily operations. Buyers may value the second business more highly because its earnings are less dependent on the current owner remaining involved every day. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.